What's going on, everyone? Welcome back to Benefit Genius. Today, we have an important update on Social Security that could affect millions of Americans. If you've been following the Social Security Fairness Act discussions, you'll want to hear this. There's been a lot of confusion about when and how these changes will impact your benefits, and I'm here to clear that up. Before we dive in, please take a moment to subscribe to Benefit Genius and hit the notification bell so you never miss an update on Social Security and financial trends. Let's get started. Recently, Representative Larson went live to answer questions about the Social Security Fairness Act. He was asked about new updates regarding the elimination of the windfall elimination provision in government pension offset. For many public employees, teachers, firefighters, municipal workers, these provisions have unfairly reduced their Social Security benefits. Lawmakers have been working hard to repeal these provisions and restore full benefits to over 3 million affected individuals. Larson explained that the Social Security Administration is currently processing the changes, and they aim to complete this by the end of March. That milestone is significant because once processing is finished, retroactive payments and adjusted monthly benefits could start rolling out soon after. However, this rollout will likely happen in waves, meaning not everyone will receive their payments at the same time. One major challenge remains. The SSA is facing staffing shortages and potential budget cuts. These issues could delay processing even if the law is in place. Now, let's talk about how interest rates factor into this whole discussion. The 10-year Treasury yield is crucial because it directly impacts borrowing costs such as mortgage rates, auto loans, and credit card interest. When the 10-year yield falls, borrowing becomes more affordable, which benefits everyday Americans. There was a time when a prominent figure demanded immediate cuts to interest rates to help reduce these costs. At one point, conflicting reports emerged, with some outlets claiming he was outraged with the Federal Reserve while he later stated he agreed with their decision to hold rates steady. This back and forth created a lot of confusion, but the key point remains. Lowering inflation is the path to lower long-term interest rates. Let me break that down for you. Imagine inflation is at 9%. As a borrower, you'd need an interest rate above 9% to stay ahead of inflation. If policies succeed in lowering inflation to, say, 5%, then the necessary interest rate drops accordingly. Lower inflation means lower borrowing costs, which benefits everyone from homeowners to small business owners. The new plan being discussed focuses on reducing inflation by boosting energy production, cutting unnecessary government spending, and streamlining regulations. Cheaper energy means lower costs for goods and services. Reduced government spending means less money circulating, which can help curb inflation. And cutting red tape improves efficiency, leading to lower prices across the board. All these measures work together to create an environment where interest rates naturally drop over time. But here's where the media often misleads us. Headlines have sometimes portrayed these developments as a direct clash between political demands and Federal Reserve decisions. In reality, the Federal Reserve operates independently and bases its actions on economic data, not on political pressure. Even though some reports suggested a dramatic showdown, the focus remains on long-term trends rather than immediate changes. Now, what does all of this mean for you? First, if you're planning to buy a home, understand that mortgage rates will remain high until inflation is significantly reduced. That means you may need to adjust your budget and financial plans accordingly. Second, if you're waiting for benefit increases, be prepared for a gradual rollout. Retroactive payments and monthly increases might not happen overnight. SSA's processing delays due to staffing shortages are a real concern. So, while progress is being made, patience is key. For those affected by the windfall elimination provision in government pension offset, these changes could mean a restoration of full Social Security benefits. Imagine the relief of finally receiving the full benefit you've been entitled to for years. This isn't just about numbers, it's about the financial security of millions of hardworking individuals. Now, let's consider what you can do during this transition period. Make sure your personal information with SSA is accurate. Check that your direct deposit details and mailing address are up to date. This will help avoid any unnecessary delays in processing your payments. Stay informed by following reliable sources like Benefit Genius. Understanding the broader economic context, including inflation and interest rate trends, will help you make better decisions about your financial future. And if you have concerns or specific questions, consider speaking with a financial advisor. They can provide personalized guidance tailored to your situation. I also want to address a common misconception. Some believe that political leaders can force the Federal Reserve to cut interest rates immediately. The truth is, the Federal Reserve makes decisions based on economic data and long-term stability. Political pressure may spark discussions, but it doesn't override the Fed's data-driven approach. So, instead of expecting an immediate drop in rates, focus on the long-term goal. Lowering inflation will eventually lead to lower borrowing costs for everyone. This is good news for homeowners, borrowers, and investors alike. Lower interest rates mean lower monthly payments, lower costs of loans, and a healthier economy overall. Now, let's sum up what we've discussed today. The Social Security Fairness Act is making progress, and over 3 million people could see their benefits restored. The SSA aims to finish processing these changes by the end of March, with payments potentially beginning in April and continuing in waves. However, challenges such as staffing shortages and budget cuts could delay the rollout. At the same time, discussions about interest rates remind us that lowering inflation is key to reducing borrowing costs. This long-term approach means that while immediate changes may be minimal, the overall financial outlook could improve significantly over time. So, what do you think about these developments? Are you optimistic about the changes, or do you have concerns about potential delays and the impact on your personal finances? Please share your thoughts in the comments below. I'd love to hear from you. And if you haven't already, please subscribe to Benefit Genius and turn on notifications so you never miss another update on Social Security reforms, financial trends, and retirement strategies. Thank you for watching. Remember, staying informed is the first step toward building a secure financial future. Take care, stay prepared, and I look forward to seeing you in the next video.